Hello, hello, hello. Welcome back to some more cryptocurrency news articles for you, where I report those daily crypto news. Today's article comes from the Bitcoinist and why crypto could be lifesaver in looming recession shock. Bank of America warns. So let's go over this article. Because that was an exciting title. Per a Reuters report, Bank of America Chief Investment Strategist Michael Harnett has warned the U.S. public about a potential economic recession and crypto as a possible safe haven. In a note sent to the bank's clients, Harnett claimed the current macroeconomic outlook is turning bearish for stocks and bonds. Bank of America's CIS believes inflation and increase in interest rates will create the economic storm. The U.S. Federal Reserve and its chairman, Jerome Powell, will attempt to prevent the economy from getting into recession levels. The financial institution will begin to tighten its monetary policy in May 2022. Initially, Powell hinted at a 25 BPS hike, but now other members of the Fed seem to be asking for a more aggressive approach. In this scenario of high inflation and high interest rates, equities and bonds could take a hit as cash volatility, commodities, and crypto trade higher. Now, if digital assets manage to outperform stocks, this could break a multi-year apparent correlation between the different asset classes. As seen below, Bitcoin, the crypto market, and the S&P 500 have been trending to the upside since 2020. Now, at the time, the world faced a global pandemic and measures were put in place to prevent an economic fallout. This led to a massive increase in the US Fed balance sheet, which stood at above $6 trillion for the first time in 100 years. So look at that spike. This backed the crypto market boomed in the $2 trillion total market cap. But the excess liquidity contributed to a hike in inflation. In other words, the Fed supported the global economy but ended up boosting inflation. This situation could become a headwind for Bitcoin and crypto short-term appreciation, according to Bloomberg Intelligence Mike McGlone. The analysis is also bullish on long-term potential for the new asset class. Here we see Mike McGlone's tweet. The biggest headwind to Bitcoin and macroeconomic sensitive commodities such as crude oil and copper stems from possible stock market declines. Near-term risks are rising as the Fed steps up its inflation fight, which could include efforts to cool the wealth effect. So yeah, look at that dip. Wow. Crypto could outperform regular assets, though. In the long run, digital assets could decouple as investors seek inflation hedges and assets capable of generating yield. In that sense, Bitcoin and Ethereum seem poised to attract fresh capital. Bill Bonner from Bonner Private Research believes the Fed and its chairman are responsible for the current economic outlook. In that sense, he believes the financial institution will fail in its attempt to prevent inflation from rising any further. To stop inflation metrics from rising, Bonner said, reaching a similar conclusion that Bank of America's executive, the Fed, would have to cause a market shock, Bonner said. In order to escape his trap, Jerome Powell needs to cut away 14 years worth of bad policy. Does he have the stomach for it? Could he endure the plan? We doubt it. Commodities, Bitcoin, and digital assets could be the only way out for the small guy waiting to take shelter before the perfect storm hits. So yeah, the perfect storm's coming, people. And 14 years ago, let's see, 10 would be 2012, then 4 more would be 2008. So yeah, so the bad decisions are talking about what's happened since the last real estate crash of '08 and '09 that hurt and hit a lot of people out there. And at the time, that was only a band-aid was put on it. There was never a fixed solution, so prices kept going up, and it just did not make sense at all. So we are in for what a lot of people are saying could be like the next Great Depression, because not only will this recession be bad, but like we're following the same signs as the 1920s. Like in 1919, we had the Spanish flu epidemic go on. And then there was a whole thing going on, just like what's going now in these times. Then there was printing of money. People will say it was a roaring 20s at the time because they were printing so much money and spending it. But then once, like it was like 1928 to 1932, like the big crash happened, and then the depression happened. People couldn't afford anything anymore. They just printed too much money, and we're just following the exact same signs as then. So this could be a huge thing in like cryptos could be the lifesaver for it, because it's the only way to make a switch to an actual working system, because the current fiat system is failing us and we need a replacement for it. And that's where Bitcoin and certain cryptocurrencies out there could help solve the problem. So yeah, so get it while you can, because even banks are warning us now. Like once it's in the full-time media, it's too late. You should have been preparing for a long time. Like me and a couple of other people have been trying to get the public to realize. The Economic Ninja, who is a great listener, if you haven't listened to him, he really tries to spread the word out there to help people out so they can prepare and not have to struggle through these hard times when they come. So people, be ready, be prepared. Make sure you're in control of your cryptos too. Don't have them on any exchanges at all. So when crud hits the fan, I'm not using the bad word because kids might be watching, you are in full control and you will not lose your cryptos at all. So yeah, great article for warning us of what's more to come. And if you liked listening to this, if you got some education from it, hit that thumbs up button. Share this with your friends so they can be prepared too. And don't forget to subscribe to the channel so that way you do not miss a beat. So until next time, the Crypto Sherpa is out.